Hey, what is up guys, and welcome back to my channel. And for today's video I want to talk about my new portfolio, and now this time I'm going to go into more details on why I decided to invest in these industries and also why I decided to invest in these companies. For this video I'm going to talk about only 2 industries and 3 companies. In future videos, I'm going to talk about the other industries and the other companies as well. But before we get into the content, if you like this video, click the like button and subscribe to my channel. And also, if you have comments about this video or if you have any idea about future videos, please leave those comments in the comment section below. So the first industry I'm going to talk about is the banking industry, one of the strongest industries in the country. And specifically, I'm going to talk about the first bank, which is the TD Bank. And the reason why I like this bank is first because of the dividend yield, which is at 5.11%. The price at which I bought this share was $61.02, and the price before all this crisis started was at 75.98 cents. So basically I saved about $15 per share, and that was a good deal actually. And the percentage of my portfolio is 6.54%. So we can see here the summary image of this company. Important to notice here that the PE ratio is at 10.85. That means that the share, actually the price of the share is not expensive at all actually, and the market capitalization also is $111.594 billion, which actually is one of the biggest companies in the industry as well. So getting more into the details, I wanted to take a screenshot of the order when I bought my 5 shares, because so far I have only bought 5 shares per company. So, and this is the price of the total 5 shares. So the estimates for this company for the current year is minus 29.90%, which is kind of normal because of the situation that we all know, and that's why the lockdown and all that stuff, it's actually hitting hard this basically every company in the country. And the growth estimates for the next year, it's 21.30%. Important to notice here that basically almost in 1 year, according to the experts, the company is going to fully recover from the crisis that we are experiencing right now. And also another thing to notice here is that for the last 5 years, in average, the growth of the company, it's been 11.23%. So we can see that the company has been growing actually a lot, and it's something important you have to take into consideration when you want to invest in a company. So what are the earnings estimates for this bank? Well, for last year it was $6.69 per share. Remember, these are earnings per share. So for this year the average estimate is going to be 4.69, which is obvious because of the situation, and for the next year it's going to be 5.69. So we see the trend here that experts expect that this company is going to grow significantly. And we have now more details about the dividend. Important to notice here the payout ratio of the company is 52.81%. That means that the company, out of the 100% income, is going to use only 52.81% to pay out the dividend to its investors, meaning that it's going to have about 48 something percent, 47 and something percent to invest in the company as well. So they can use this money to get more assets, make more investments, improve their business, their technology and stuff like that. So actually it's something really good because the company is actively adding more income to their own business, which is something that you are looking for because they will improve over time. And the trailing annual dividend yield is 4.94%, which is something actually really good because it's a considerable amount of percentage given to a yield. So we see here also the chart of the dividend history. We can see the trend that the dividend is been increasing over time, which is actually something really good. And this is the balance sheet of the company. We can see here the total assets from 2016 to 2019. It's been increasing, so it's something that we can expect because they still have a lot of income to use to get more assets, for example. And also the liabilities of the company have been increasing at the same time. But the most important number to see here is that the total stockholders' equity is being increasing over time as well. We can appreciate here from 2018 to 2019, the increase is being higher than previous years, which is something actually really good. So this is the information that I looked for on the internet. I used this information to make my own decisions of whether or not it's a good idea to invest in this company. So the second company that I invested on was BMO. BMO, another big bank of the country, one of the 5 biggest banks of the country. And the reason why is because of its dividend, which is 5.87%, and this company has been paying its dividend since 1829. It has over 100 years paying the dividend. And for me, that I'm consider myself a dividend investor, this is actually something really good because it gives me enough confidence to know that if I invest now in this company, I'm going to be paid out this dividend over time as well. The price of the share was 72.62, and the price before all this crisis was $102.47. So basically I saved about $30 per share, which was actually a really good deal. And the percentage of my portfolio is 7.99%. So going into the details of this company, we can see the summary here. Market capitalization is $48.357 billion, which is actually good as well. It's a big company. And the PE ratio is 10.09. It means that the company, actually the price of the share wasn't too expensive. And here's a screenshot of the order when I bought these 5 shares. And also we can see here the growth estimates. Last year, for the past 5 years, the company has been growing at about a rate about 7.66%, which actually is also really good. And for this year, the estimate is minus 30%, which is normal. It's obvious because of the situation, we all know. And for the next year, it's going to be 22.80%, meaning that we will almost recover from this crisis, almost. So basically, I can see here that within 2 years, 1.5 years, 2 years, the company is going to fully recover from this recession, from this crisis. And we can see here the earnings estimates is for last year it was 9.43 earnings per share, and for this year the average estimate is 6.57. It's less because of obvious reasons, and for the next year it's going to be $8.07. So like I said, almost is going to recover from the crisis. And dividends into more details, and the payout ratio, it's 55.81%, slightly higher than TD's payout ratio, but still it's a good payout ratio. They still have a lot of money to invest in the company. And the trailing annual dividend yield is 5.66%, which was actually is a good dividend yield. This is one of the best dividend yields that I have in my portfolio. And again, we can see here the dividend history. The trending is pretty obvious. It's been increasing over time, and something that I actually like a lot. The assets of the company, they have increased as well. The liabilities, they have increased as well. But like I said, this is more important because the stakeholders' equity, the equity, it's been increasing over time as well, meaning that they have more assets than liabilities, which is something good in a company. So this is the analysis that I made when I bought shares of these two companies. Now, moving on to the next industry. So moving on to the next industry, now I'm going to talk about the telecom industry, another very important industry in the country. So there are three companies that almost take up the whole industry in the country, but we all know Telos, Bell Communications, and Rogers. But in my case, I decided to invest in Telos because of the yield. First of all, it is at 5.2%, and also they own 30% market share, which actually is really good. So meaning that companies that want to enter this industry, for them it's going to be harder because these monsters on the industry actually take up a lot of the market share. So that's one of the reasons it's a good investment. So the price of the share was 22.88, and before the crisis was 27.55. So I save about $5 per share, and the percentage of my portfolio is 2.48%. So this is the summary of the company. The payout ratio is 17.15, a little high, but still not too high for not to invest in the company, because the average is between 15 and 20. So it means that if the P ratio is between that range, it could be a good investment, because you don't have to take only into consideration the P ratio to invest in a company. There are more things that you have to take care of before investing in a company, but this one is a good number, so it's still a good investment. The market capitalization of the company is $29.84 billion as well. This is the screenshot of the order when I bought these shares. And the growth estimates is for the past 5 years, it was 5.75%. For this year is 12.90%. For the next year, and for this year is minus 13.30%. For obvious reasons, we can see, important to notice here, that this company is going to fully recover from this crisis in 1 year almost. So it's good for you, because it means you're going to recover your investment faster. So earnings per share estimates last year was 1.43. For this year, the average is 1.24, and for the next year, it's going to be 1.4. It's going to be higher, actually. It's actually something really good. So the dividends detail is payout ratio 83.58. It's quite high, but still, it's not a big deal. I would want it to be lower, because when you get into this industry, you have to buy technology over time, and it's quite expensive, so you need more money. But anyways, the company has a good history dividend payment, which was one of the reasons why I decided to invest in the company. And the trailing annual dividend yield 4.94%. The history of the dividend is this. It's been increasing in small percentages, but at the same time increasing, which is important. And the assets, liabilities, they have increased at the same time, but like I said, the equity, it's been increasing slowly, because we can see here from 2018 to 2019 the increase wasn't too high, but still they increased it. So These are the first three companies I decide to explain, and these are the reasons why I invested in these companies and in these industries, two of the biggest and most important industries in the country. And this is the reason why I decided to invest in these companies. So you have now a better picture of things to consider when investing in the stock market. So this is my portfolio. In future videos I'm going to explain like I did here, about the other industries in my portfolio and the other companies in my portfolio. So stay tuned. If you like this video, click the like button and subscribe to my channel. Also, if you have comments about this video, leave those comments in the comment section below. And thank you for watching and have a good one.